This is the Domain Magnate Show, where you'll learn everything you need to know about buying, optimizing, and selling online businesses with your host, Michael Beroslavsky.
Welcome, podcast listeners. Today we have on our show Dom Wells from Onfolio. Hi, Dom.
Hey, thanks for having me. Good to be here.
Thanks for joining. So Dom and I do some very similar things. We both buy and manage sites. So I'm really excited to discuss different aspects of that. And yeah, I think that'll be really interesting to chat about.
Yeah, definitely. I think there's always so much to talk about, so many different things to learn. So should be an interesting discussion.
Yeah, so let's jump right into that. And just for our viewers, give us a quick introduction to what you do, what Onfolio does, a little bit more information about the company and you.
Yeah, sure. So basically Onfolio helps people to buy online businesses, specifically content websites. But yeah, how we do that is the majority of people that we work with want to own an online business, but they don't really want to run it. They're not looking to buy a job. So they basically hire us to do that part for them. And we help them to find a good website and then evaluate whether it's a good website and what the risks are and what the growth opportunities might be. And then if we decide, okay, yeah, this is a business we like, we want to move forward, then we help them do the migration, do the negotiation with the seller, and basically take control of the website. And then from there, our job is to run it for them and grow it and turn what is an active investment for most people into a passive investment for them.
So do you guys manage all aspects of running a website, like setting up monetization methods, and doing the SEO, doing the technical things, everything, or just some of it?
We do most of it where relevant. So some sites do really well with like an email list and a funnel and having some digital products. And we've got pretty good at that over the last year or so. Had a lot of practice and seeing what works on lots of sites and what only works on one specific site and things like that. A lot of sites we run that isn't applicable. So for a lot of sites, it's really just making sure we've got the SEO turned on, and that's kind of all there is to it. And then other sites are somewhere in between. So yeah, we manage everything. The only thing we don't manage is the finances. The site owner will always be in control of that. So they'll receive the money into their account and then they just pay us for our services rather than us receiving the money and paying them out. We don't really want to be in that situation where we're sort of having to handle everybody's funds. So it removes a little bit of the necessary trust that the investor needs to have.
Does that make it complicated sometimes? Because we have some sites that have 5 or 10 different revenue streams. So then the investor would have to set up all these different affiliate accounts and track it every month.
Yeah, it can make it complicated, but it's better than the alternative, which is us trying to keep track of all the different revenue streams for all the different sites and trying to avoid commingling funds. It's a lot. It's easier to just say to someone, "Hey, can you send us a report from 5 dashboards?" than it is for us to try and create those same reports across 30 or 40 clients. And at the same time, I think the real hard part is actually asking investors to send us money or reimburse us for expenses and things, because we want to make sure that that's done in a timely fashion. But I think it's still the better way of doing it.
Yeah, that's actually quite interesting, because we do the same. And we usually ask investors, we give them an option. Do you want to manage the finances? You want to manage all the revenues and stuff and send us the reports? or do you want us to manage it? And we tell them, like, if we manage it, it's going to be a bit more expensive because it involves a bit more effort for us. And so far, everyone said that they prefer us to manage it because we don't want to deal with that. Like, we want to deal with as little as possible. It's a little bit extra, extra stuff to do. But I found it also helps us manage the business better because if the finances go through us, it's much easier for us, for example, to optimize it, to find some better affiliate programs, to negotiate deals, to constantly keep improving the conversion rates.
That's an interesting way of doing it. We've had one person who said they wanted us to do it. We don't really give people the option though, so it might be something people prefer. And I think having the ability to have all of your stuff going into one account so you can negotiate higher rates that's an interesting upside that I hadn't really considered. I think for us, it was when we first started out about around 2 years ago, some people who came to us they wanted to make sure that we weren't going to be like another company who recently turned out to maybe be a Ponzi. And, they said that company, they didn't trust that company and they didn't want to be in a situation where they lose their money. And so when I'm saying we don't touch your money, they felt a lot more comfortable with that. And so I was like, well, it's not a big deal for you to manage your own funds. And if you feel more comfortable, then like, absolutely. So that's just how we've always done it. And then, a year later, that company went out of business and everyone who sort of chose us was like, yeah, okay, we made the right decision there. So it kind of felt like we validated doing it this way.
Yeah. The company that shall not be named, but the listeners, of course, will know who you mean. And we had similar experience with investors. They were like I lost money with them. Like, how do I know that you are not a Ponzi scheme? And what we would just say is, you would own the website because you would have the domain name in your account. Like, you can have the site in your accounts, and we send you reports. And this is the exact site that we acquired for you. And that company, I understand they just didn't provide any details of what they were doing.
No. I had one person reach out to me afterwards and he had taken control back of his site. And I said, how much is it making? What's the traffic? Because he was asking me, do I think it's a good site for me to grow or should he sell it? And so I was saying, well, yeah, how much is it making? What's the traffic? Anything else you can tell me? And he said, I don't know. I just, all I know was this was my site and the liquidator gave it back to me. So it turns out the site was basically making no money. And so I just recommended he sold it. So it was, I guess what you're doing is kind of a hybrid where you're still letting the investor know what their site is and you're still letting them have ultimate control, but you're just making the bookkeeping easier for them. So that is it's a good alternative.
Yeah. Also for us, right now, like most of our assets are in our fund, so that's a bit different. And with the fund, basically everything is like registered kind of under the fund, the accounts and the sites. So that's different. And now we are setting up a second fund as well. So we'll do it the same way. We do have some sites with individual buyers, but probably not as many as you guys do.
Yeah, and it's a completely different. If you're doing a fund, then it's a completely different conversation because the only way to do it in a fund is to manage all the finances. So I think that's actually the best way to succeed in the space anyway, is pooling money. So
how many sites do you guys have right now, like more or less?
Between 35 and 40.
Cool. And how big is your team right now?
Right now on payroll, there's 16 people, mostly full-time, but some are just like contractors or freelancers that we use as needed.
Yeah, it's basically the same for us. Yeah, we also work with one or two agencies for like some things, like some content and some backlinks, but mostly we try to do it in our team. Like we are trying to get our team to actually go and do the backlink outreach and building backlinks, because like I feel that's those things that are super important, that like top priority. It's best to develop those within the team.
Yeah, and you can at scale. It's so much cheaper as well to have it done in house.
So interesting times we live in. I'm curious to discuss basically your thoughts on the COVID-19 situation and how it's affecting the industry. What changes do you see in the past few months, and what changes do you expect later this year?
Yeah, so for the second question, what do I expect? No idea. I think we're still quite early. I think, so for people listening to this in the future, we're recording this in May 2020, so middle of Q2. And so far, we can talk about the effects that we've seen so far, but I think a lot of the effects haven't happened yet. Right now, something like 25% of the US is unemployed or is on some kind of benefit. And that's huge. And those are going to have cascading effects that we haven't seen yet. So I honestly don't know what that's going to mean. Does it mean a huge, well, of course it means a recession, but what is the recession going to look like? It seems to be different from the 2008 situation when there was no credit and everyone was foreclosing and giving up their mortgages and stuff. Like this one maybe seems like there's more credit available. So maybe like people are being able to delay their mortgage payments and stuff. But what we're seeing right now is it's actually quite interesting. A lot of online businesses are actually making more money because everyone's stuck at home with nothing to do but spend money on Amazon. So Amazon sites, up until Amazon decided to, slash their commissions, they were actually crushing it. Whereas sites that are monetized by display advertising are typically getting more traffic, again, because everyone's at home Googling stuff. But display ads are paying a lot less right now because the people that would be traditionally running those ads, like retailers and big kind of traditional companies, they're not spending as much because, well, everyone's stuck at home. So, no one's going to go to their shops or whatever. But because they're getting more traffic, typically what we're seeing is the sites are still making about the same as what they made prior to the pandemic. So it's kind of interesting because there's a bit of a belief within the space that we're going to see the market switch from a seller's market to a buyer's market. So multiples will go down, buyers will be able to get bargains. And I'm skeptical because sites are making more money. So why would sellers be desperate to sell? And also, if a site makes less money, then it's going to be valued less, but does that justify the multiple being less? So there's all sorts of factors. Now, in some situations, yeah, you're going to pay a lower multiple. In other situations, it's not going to be affected. And there's so many buyers queuing up right now to buy sites. That's kind of mitigating any pressure on the sellers from what I'm seeing. So that's kind of annoying because I was looking forward to getting sites at discount. But yeah, so far that's kind of what I've seen.
Yeah, that's interesting. Yeah, some really good points. I'm actually seeing some sites go cheaper already. I think it also depends on niches. So there are some niches that just went down a lot. Some went up a little bit, some stayed present. But what we are seeing is that because of the global financial crisis, because of that unemployment, like you mentioned, people just generally have less money. And when the crisis happens, like people have less money, they have less money to invest, they have less money to buy things, they have more bills to pay, and that would motivate them more often to go and sell their business. And so I think the way I see it is more from a global financial perspective, that the financial crisis would just help shift that market to a buyer's market from a seller's market right now. I think I think that's going to happen at some point, like in the next, assuming this COVID situation continues maybe for another year or two until they get a vaccine, until things start to get back to normal, although that's unclear what it's going to look like. But it's maybe a bit early to tell, but probably we'll see some major effects, I think.
Yeah, that's a good point. And I think it probably also depends on the size of the website. One thing I'm seeing is sellers are a lot more willing to accept seller financing right now. And that could be because there's fewer buyers. And I do think some froth has come out of the market as well, whereas late 2019, everyone was high off the economy and everything always goes up, and everyone believed just the economy was great and everything was going to work, so they'd be like, yeah, I'll buy that business, whatever. Whereas now people are like, ooh, hold on, like I'm not sure if I can part with $300,000 without thinking about it. So certainly what I'm seeing is more seller financing at a lower point. Whereas before, maybe you might say anything below $300,000, you have to pay all cash. Now it's probably not the case. So I think, and you're able to get more financing as well. So maybe instead of like you had to pay 70% cash, you might be able to get away with 50% cash or something like that.
Which
could be an advantage for.
I wonder if that has to do with the COVID-19 situation, or if that's just an industry trend that's developing in past years.
Yeah, my guess would be it's because of this, but it could be just that was the way it was going. I think the Google landscape over the last 2 years hasn't helped either, because websites can just randomly get hit now with a Google update. That means people are probably less willing to pay 100% cash. So you'll see more earnouts as well, not just seller financing, but actual like performance-based earnouts.
Yeah, we try to do that as well often, whenever we can, as buyers.
Yeah, it makes sense.
And how did the Amazon commission change affect your websites? Was it a big shift?
Well, I mean, obviously, some categories we went down from 8% to 3%. So, you tell me how that affected us. But portfolio-wide, we weren't that deep on Amazon. So some sites individually, they've gone from like, $6K a month to $3K a month, which is a little upsetting. But at the same time, those sites, the reason they were making so many sales was because Amazon was just on fire and everyone was buying. And so even after the commission decrease, we're still making more money from those sites than we were a few months ago. So I think what will be really painful is when the Amazon sales or traffic kind of goes back to pre-COVID levels. If it ever does go back, then we'll be back at the old traffic levels, but we'll be on a 3% instead of an 8% commission. There's no way Amazon's going to say, oh, okay, you can go back up to 8% now. So right now, we're still doing okay, like year on year, month on month. But it'll be interesting moving forward how those types of sites are affected.
Yeah, it's the same for us. We had quite a few Amazon sites, so maybe like 1/3 or even like more than 1/3 of our sites had mostly Amazon revenues. So we've been working a lot in past months now on trying to sign up with all the different other affiliate programs and negotiate better rates and diversify as much as possible, like away from Amazon. And it's been really interesting, actually. Like one thing we've learned, which is a bit surprising, is there is just a huge difference in conversions between like big brands and small brands. Like we have some niches that we are in, and there is a lot of different companies, like 50 or like 100 different companies selling more or less very similar product, like pretty much the same product, just different brand. And like we've tried working with the ones that are less known, and they give us much higher commissions, so that's nice. But it just doesn't convert, like no one is buying them.
Yeah.
And then we would put one of the big brands, and they are a lot more difficult to negotiate with because they have so many clients, like so many affiliates, but they convert really well. So it's always a bit of a trade-off. But yeah.
There's a lot of people in Facebook groups and stuff talking about they just buy Amazon sites and they just replace the vendor, and they take Amazon links off and they replace it. And I don't think they're lying or anything, but I think it's not always that easy. I think you can, if you find one niche where it works and then you can buy lots of sites in that niche, do that all day long because it's a great value add. But we run probably more sites than they run, and unless we just are completely clueless at how to do it, which is a possibility, we just haven't seen the results. And it's partly because of what you said, that the smaller brands just don't convert as well. It's partly because how a typical Amazon page was set up was pretty much just designed to get the click. So it's like, hey, click here for the price. And then Amazon does the work. So in that case, you would want to kind of completely rewrite the page and warm the person up for the sale more. Yeah. And the third reason is, even if it does make more money, you're losing all of the Amazon, like the secondary sales that you get paid for. So I'm not saying it can't be done, but it's not just a case of like take out Amazon link and replace it with like share a sale link. It's you need to completely redo the site and the article. And so when you're running 40 sites, it takes time. So for a lot of our sites, we're not even going to bother because they probably won't make more money than if we just leave them with Amazon.
Yeah, it's basically the same for us. Like we just start with the big ones, the top products, and we have to rewrite, like often we just rewrite a couple paragraphs. Sometimes we have to rewrite like a big chunk of a page to adapt to that new affiliate program. But I was actually, some of our guys actually did some tests recently on one product, and they tried like 3 or 4 different programs, including Amazon, to compare it. And Amazon is paying 3%, and the other programs we had were paying between like 8.5% and 30%. And surprisingly, like it was pretty similar. The conversion of Amazon, like the money that Amazon made in the same spot, with the 3% was pretty similar to what like other programs made, like 10 or 18 or 20 or 30% commissions, because of such a huge difference in conversion rates.
And I bet Amazon knows that. Like I'm sure they tested these things before they pulled the trigger and made the switch, and they were like, well, where are our affiliates going to go?
But I think the key is just kind of rebuilding the website, because the way many of those Amazon affiliate websites were set up is you have a table, you have like 10 or 20 products every page, and these like short reviews. But if you just you have to restructure the whole thing, right? Like practically the whole website. But it's worth it if this is a really big website with not that many pages. and then you can direct the traffic to those top main advertisers that you work with, and like set up the newsletter and set up the social and everything so that it's all focused around those top affiliate brands. Then I think it's definitely worth it, because then you will have really good conversions. But like the main thing that I agree, the main thing that like most people in those forums, those groups, they don't really talk about is how it's just a different model. Like the model we have with Amazon, the way to make it convert is very different from what it would work with like share a sale.
Exactly. Yeah. So like if you were starting a site from scratch, or creating an article from scratch, or just buying a site, and it was all about not affiliating with Amazon, then probably none of these difficulties would happen, because you would just have to, the article you write is going to be more warming somebody up for the sale. And basically, instead of saying, hey, these are the top 10 products, go check out the reviews on Amazon, my job here is done, you would actually have to explain in your article why this product is the best, and really convince somebody, or not convince, because hopefully you're reviewing something that is the best, but really explain to somebody why it's the best. And then when they click through to the vendor's sales page, you have to hope it's not a garbage sales page. And then you'll probably make more money than you would with an Amazon site. So if you're building it that way and designing it that way from the start, then it's a lot easier than trying to take a site that's been affected by the Amazon changes and then simply change the links, which is interesting, because there's a lot of people right now who are saying the real opportunity in the space is to buy an Amazon site, because it just became 30, 60, 50% cheaper, and then replace the links with share a sale or whatever. And my thoughts are, well, yeah, have fun with that, because you're going to have to do a lot of rewriting.
Yeah, I mean, it does work in some cases, but it's definitely not that simple. So we with that thing that we've been testing, we have been able to increase the revenue basically to the point that it's the combined revenue is like similar to what the revenue was before with the old Amazon commission. But it did take quite a lot of effort, and also the traffic increased a little bit. But I've also seen sites where it just works, where you just replace the top listing, the top Amazon listing, with something that's really good. Often something from one of those, affiliate performance networks, not share sale, but the ones that are set up to convert really well, pay a very high CPA rate. And then it just works like incredibly well. I've seen sites where people just replace with one link and make like 5 times more revenue right away. It's extremely rare, but sometimes if it works, it's incredible.
Yeah, that is true. There are those opportunities. And sometimes, I mean, we've tested a couple of things. Sometimes we've had a product which sells on Amazon and it also sells on its own website. And we've tested just sending people to Amazon, just sending people to their website, or sending them to both, and just saying like, hey, buy from Amazon or buy direct. And sometimes you'll find not giving Amazon as a choice is what makes you more money. Sometimes only Amazon makes you more money, and sometimes having both is what makes more money. And sometimes it doesn't make a difference. You make pretty much the same whatever you do. So it's just a case of sort of systematically testing it. Like if you do have a site that's been hit by Amazon and you're listening to us saying, oh, it's not that easy, and you're thinking, well, I need to do something, I need to try, then yeah, you just have to systematically test, and you're going to put a lot of hours in. But you may be able to come out the other side with a site that makes more money. So it's worth the effort.
Yeah, absolutely. I agree that it's all about testing. And I think that this is different from other type of testing, like when you do SEO type of testing, because this is kind of like really long term. Like once you find that working combination, it's probably going to keep working for you for a while. So that if it's a big enough site, that might be worthwhile to test. But also there are many Amazon affiliate sites that there is just nothing else to replace with, like sites selling refrigerators or some kind of items like that. There is just like it's practically impossible to find another affiliate program.
Yeah, that's a really good point. Which is kind of like, I guess in hindsight, it's like, yeah, I probably shouldn't have built a site or bought a site around that. But yeah, it is a good point. And it's the same, like some sites, maybe 80% of their sales come from other products that people buy on Amazon. So by all means, replace the links or give people an alternative option to buy from somewhere with a higher commission, but don't completely remove your Amazon links, because you're going to need to get something that converts as well as Amazon and pays like 100% commission to make up for that, like the loss of those other sales. So
yeah. So what do you think are some of the best opportunities to buy now? Like if you were buying, what kind of things are you looking to buy currently?
I think the longer the pandemic goes on, the more interested I'll be in buying display advertising sites. And I don't know if I should explain my logic because it might kill the opportunity. But hey, so people are buying Amazon sites, or people think there's an opportunity to buy Amazon sites because of the things that we just talked about. They're cheaper and they might be able to get an uptick. But display advertising sites are definitely cheaper as well because display ads are paying less. But it's almost guaranteed that they're going to earn more when the pandemic goes away. So you might have a site which last May made $10 to $15 per 1,000 visits. And now, because of the way display ads are down, they might only be making $6 or $7 per 1,000 visits. So those sites are going to be cheaper for the same amount of traffic. So my theory is you could buy those sites, and as the year goes on, the RPM is going to go up anyway because Q4 always pays more than Q2, blah, blah, blah. But come next Q2, you might see that site's making 10 to 15 RPM per 1,000 visits again. And so essentially you could not grow the traffic and the income's just going to go 50 to 100% higher just because advertisers are spending more. And the reason I think this will become more of a strategy the longer the pandemic goes on is because it takes time for averages to come down. So if a site was making, say, 10K a month, January, February, March, and then it's gone down to 6 or 7K in April, that's not going to lower the purchase price too much. So you're going to need a prolonged period of reduced RPMs, because that will A, make the average now lower, and B, it'll make your argument to the seller stronger that you're saying, no, I'm not paying based on last year's money, I'm paying based on like post-pandemic money, income. Yeah, so that's kind of something I think is an interesting opportunity, certainly easy, because you don't do anything, you just wait for the RPMs to go up. And then I think another opportunity is just being able to buy more sites with seller financing. I think that's an obvious opportunity. And aside from that, I can't think of any screaming opportunities apart from like a kind of per site basis where there are going to be some situations where a site seller is now a distressed seller, whereas they weren't previously. There's going to be like, I don't know if you can systematically find those opportunities, but there's going to be some of them existing where someone needs to sell in a pinch, and if you're in the right place, you can get a sweet deal.
Yeah, that's an interesting point about display ads. But the difficulty is it's a little bit like timing the market. So if you buy it like now, and then let's say this whole thing continues for another 2 years, then that $7 RPM might become like $3 before it goes back to like 10 or 15.
Yeah, that is something I'd thought about. You have to figure out, like, is this the lowest it's going to be, or could it go lower? Which again is why I think the longer it goes on, the better I'll feel, because I feel like I'm closer to the bottom. Because if it's going to be a 2-year thing and you buy it 6 months from now, well, there's only a year to go. So yeah, that is a really good consideration as well. So I think really we have to see what happens to the world once the lockdowns end, because I think there's kind of 2 stages to this recession. There's like what we're seeing now, where there's lockdown and people are losing their jobs and all of this. But then what happens to display advertising once people can leave their homes? Do advertisers suddenly spend more, or do they spend less because suddenly we're going to these effects of the economy haven't even happened yet? So I think Q3, maybe Q4, is going to be a lot more insightful than where we are now.
Yeah, I think it's a really good point that it might be difficult to predict, but it's definitely important to pay attention to those RPMs. And we've noticed that as well a lot in Mediavine, in AdSense. Like things are, like RPMs are definitely going down a lot in the past few months. It's interesting to see how much is going to correlate with the virus situation.
Yeah, I saw a chart shared that Ezoic said RPMs are starting to creep back up. So it's like, if this is like I just need to make sure my hand's actually in the right place. Yeah, if this is, I'll do it this way. If this is like the sort of where the RPMs were last year, and then this is where they were sort of April 1st when everyone's budgets reset, and they are slowly going back up. And right now they're halfway back up, but it's really hard to predict because some sites RPMs are just fine. Other sites, they're still going down. So the market overall isn't going to represent the individual deal that you might be looking at.
Yeah. So, it's very industry specific. Like there are some industries that are just dead, like travel and tourism. And there are like a lot of industries that went up a lot. So that also causes a lot more advertising to be spent on them.
So travel is a really good example of either a potentially amazing opportunity or buying like a ticking time bomb. Like, I think I saw a site listed on Empire Flippers in the travel space in March. It was like, I think it was pretty much the week that the lockdown started. So they had obviously been going through this listing and vetting process for a couple of months. So before the virus even started. And I think the site was listed for around $2 million. I don't think I checked it out beyond that, but I wouldn't be able to reveal anything more about it anyway. But and so I was like, wow, I felt really sorry for the seller, because I was like, you go from thinking, oh, I'm going to make $2 million to, can I even sell this website? And you're making maybe 60K a month to maybe you're not even making anything. So suddenly your income's gone, your potential windfall's gone. So I felt really sorry for them. But then I was talking to someone about it and they said, hey, that might be a really good buying opportunity. If you could buy that now, for example, for 1 million, assuming the seller went for it, and let's say you could actually do the deal, you could buy it for half price. And then in a year when everything opens up again, you've got a $2 million business for $1 million. And it's like, yeah, cool. But what happens if the site never becomes worth anything? Like maybe before the economy opens up again, that site gets hit by a Google update and you just wasted $1 million. Or there's just so many, it could be a huge win, or it could just be a really stupid move.
It could.
So there's just too many question marks.
It could also be a longer time frame, like what we are thinking 1 year. Maybe it's going to be 5 years. Who knows? So you have to potentially be ready to, to take that loss for a while until it goes up a lot.
Yeah, and maybe you could have spent that $1 million on a different website which is maybe not gonna double when the economy comes back, but it could just grow really well over the next six months, like kind of regardless of industry trends. So you have to weigh out that opportunity as well.
Yeah. Travel is interesting to see how it's like what's happening. I've seen that a lot of businesses are just like still in denial. Like we had some sites coming in and saying, well, our traffic has dropped a little bit, and it's like 3x down, the traffic and revenue. And he's like, but it's going to recover very quickly. So we are not going to sell it based on these current trends. We are just selling based on the previous revenue. And then, of course, no one.
Oh, good luck.
Yeah, of course, no one responds to them, but they are persistent. And I guess it's going to take a few months until more of them realize that things have changed. But there is also the other end of it. Like I was talking to a friend of mine that has a sizable travel business, and we spoke like a month ago. I'm like, how's it going? He's like, not good. Well, how not good? He says like his revenues are down 120%. Like, how is that possible? How can it be more than 100% down? Like that's not physically possible, right? But he says because there are no current orders and all the previous orders requested a refund, so had to refund all the previous orders, and basically there is no revenue coming, so it's just really bad.
Wow.
Yeah, that happens too. Luckily, we are not in travel. We don't have anything in travel or in tourism, so that was good.
Yeah, we don't either, actually. Just lucky. I'm not really that keen on the travel niche for content websites, but yeah, just lucky that we're not in that space as well.
There are many blogs for sale. Like there are many individual travel blogs that are like people traveling and kind of posting their pictures and stuff. And we've had a lot of those wanting to sell, contacting us. Often they're not big enough. Maybe they're making like $1,000, $2,000, like a little bit more. But some are really big too. And I always kind of was thinking that's an interesting opportunity. And that's another question, by the way. I'm curious to hear your opinion on that. Like a lot of the time people want to sell personal sites. So like a personal travel blog, personal cooking blog, personal mommy blog, something like that. Do you guys buy those? How do you manage that?
We have done in the past. And I don't really want to do it anymore because you think, it doesn't matter, we'll just replace the about page and replace the mum blogger or the travel blogger's persona. But a lot of these sites, that person was really driving a lot of the sales, the revenue, the traffic. And it's kind of a little bit like of an iceberg situation where it's under the surface and you don't realize that until you actually have bought the site and taken control of it, and you start getting messages on the Facebook page saying, hey, I haven't heard from you recently, what's going on? And you're like, whoops, maybe this isn't possible to buy at scale. Now, I think if one person was buying a site and they got the seller to introduce them as the new owner, and they did it over time, like first you're introduced as a contributor and then over time the seller sort of appears less and then you appear more. I think that'll work. But when you're a team trying to manage sites at scale, it's just a bit of a time sink compared to buying a site that doesn't have that.
Yeah, we had a similar experience. I've noticed that if it's a personal site, but most of the traffic is organic because the content ranks well, and then the owner is not really that responsive. It's not someone who's just spending all their time responding to fans, but it's more like driven organic traffic. But there is also a personal profile. That is usually okay. We can change it and we can adapt, and then we can just keep publishing some articles and take over the existing relationships. but also in cases where it's mostly social traffic, like that's really difficult because social traffic like Pinterest, it just tends to decrease over time. So you have to keep pinning and keep pinning, and you have to have your followers pay attention to it. And once the owner is gone, it just kind of slowly goes down. And it's much more difficult to manage those. So then, so like we have a criteria that if it's mostly organic traffic and not as much social engagement, then yeah. But if it's mostly like social engagement, then probably no.
Yeah. I mean, those ones, it's not really kind of like the blog. Yeah, the blog is not really driving any of the traffic anyway. They're just there. It's like a photo of them in the sidebar, and maybe it's not even them. Maybe it's like a stock photo or something. Like those ones, yeah, it's not a problem.
Well, one we acquired that actually went well. There was a photo, there was a personal profile, and he had a big YouTube channel there. He was publishing all his videos, and like a lot of articles were personal, but he was talking about his own experiences. But because most of the traffic was organic, so that went to hell. So I think we were able to adapt, and we were actually able to grow the revenue. And also because we were able to buy it at a low multiple, that was really a good deal, because like most buyers, they just wouldn't want to deal with that.
Yeah, that's cool.
Yeah, but it does vary. It does differ. And the good thing though about those sites is that they usually have a much better link profile. Like it's usually a lot more natural, a lot higher quality.
Yeah, that's true. Yeah, I mean, I was speaking to someone from a broker, and he said those are the best sites to buy. And I said, why? And he said, the same reason. The link profiles are natural, and sometimes the link profiles aren't there, which does give you an opportunity to grow the site if you know a little bit about SEO as well. Yeah, basically, they're just kind of like, there's less shady stuff to worry about.
Yeah, absolutely. Compared to like most affiliate sites that have just been built to rank and to make money and to sell, like that's a very different profile.
Yeah.
So what's your plan for next 6 months? Are you going to be buying more, or are you mostly going to be waiting and see where the market is?
A bit of both, yeah. We're not the thing about our model is it's really based around buying quality websites and growing them and using the cash flow to buy more. So if we come across a deal that makes sense, we'll buy it. We're not going to hold out to hope it's for sale for a discount or something. But at the same time, I think you're not going to miss out on any opportunities by waiting. I think it's prudent to wait. And I think right now we're being a bit more cautious. So instead of buying 4 or 5 sites a month, we're buying maybe 1. I'm spending a lot less time on deal flow and due diligence because I'm just kind of waiting for great opportunities to present themselves, which could be a mistake because maybe those opportunities come up if you do more deal flow. But yeah, we're kind of just continuing as before, but maybe more cautiously.
And what are your plans for selling? Do you often sell your sites, or do you just plan to keep them forever?
Most of them are in a bit of a sort of stage where they're not really ready to sell. Like we've acquired them in the last year and we're still growing them or responding to a Google update or something like that. So we don't really have any thoughts about selling right now. But I did sell. So there's 2 sites I was going to sell a month ago, and one of them got too badly hit by the Amazon changes. So I'm going to wait and sell it a bit later. And one of them, we're still going ahead with the sale. So Aside from those two, I don't really have any plans to sell any more sites in the near future. But we don't have a particular exit date in mind either, so we're always considering selling one.
Yeah, we actually do a bit of the opposite. So we try to have more, not an exit date, but like more or less a plan. Let's say we do this, we do that, and then 6 months or 9 months from now, we are going to look at selling it if all those things are done and things things fit. And we often try to see that we make double the amount we've spent if we are selling. So like
that's a good way to do it.
So like the one that you are selling, do you like why have you decided to sell it? Is it because you've made enough profit, or is it because of cost versus risk?
Yeah, I mean, I've had it for a year, and in that time, I've doubled the money that I paid. So I just thought, good time to exit. Pretty much that, yeah. I'm going to use the money for, every seller says this, but I'm going to use the money for other opportunities.
Yeah, it's funny. Like every time you ask someone, like, I'm just going to use the money to fund some other projects.
Yeah. I mean, it's partly true, but it's also, okay.
It's true.
No one's going to say, I'm selling it because I can't grow it anymore. I think it sucks. I'm going to buy a different website. And then you'd say, oh, okay, great. Yeah, I'm in.
I had that happen once or twice. Like we asked the seller, why is he selling? And he just said, I think, the site is just not very good quality. Like you can't really grow it further. Like it's just kind of shitty. And I want to go and buy something high quality.
Well, that's actually
so surprising.
Pretty honest. Yeah.
Yeah, very honest.
mean, just because he thinks that doesn't mean someone else doesn't see the value in it. So, I mean...
Yeah. Well, in that specific site, like the problem was that he was actually right. it was a shitty site, so we didn't end up buying it. But
I mean, if you could surprised. Get like a better deal for it, like you can say, hey, you said it's shitty, so I'm only going to pay 10x. Like, that could be. Yeah,
but the interesting thing I've noticed in this past like 15 years of buying, managing, building sites is that there are diminishing returns for holding sites longer. Like if you have a site for like half a year, maybe like 2 years, and then you manage it well and you get profit and you sell it, that's good. Like that you can control. But if you more in that place of holding sites for a very long time, and I think that by the way was probably one of the mistakes that this company, which shall not be named, was probably doing, is that just if you just in that framework of just buying and holding sites for a long time, like eventually your risk of getting hit by some updates or the things that happen with Amazon or things like that are like drastic events that if you read that Nissim Taleb book, what's it called? The
Anti-Fragile. Or the other one, the Black Swan.
That and the other one, the Black Swan, exactly. So like you are more exposed to a Black Swan event, like a big Google update that like suddenly Google decides that the type of links you are doing are just not good anymore, or something like that.
Yeah, I mean, I've definitely had sites where I bought them and within 3 months I could have sold them for double.
Yeah.
But I held them because I thought they could keep growing, or I just wanted to enjoy the cash flow a bit longer and then sell. And then maybe another 6 months later, there's a Google update or just, I don't know, something happens. And now they're not worth as much as they were 3 months before. And so now you have to either sell them for less and feel a bit disappointed, or you have to hold them even longer and try and grow them back up to where they were. It does, it can make things a bit more complicated. So having a rule where you think, okay, this website's doubled. Yeah, maybe it could triple, but maybe it won't. So I'm just going to sell it now is not a bad rule to have.
Yeah, it's a bit of having some kind of rule, but also looking at cost, like risk versus reward. So like, okay, this site, we can grow it, we can double it, we can triple it because there are opportunities for ranking, there are opportunities for improving monetization. And this site is probably not going to grow that much, but the competition is picking up. It's probably going to be harder to rank, so things like that. So it's a constant kind of evaluation for us like that. And like one of the first sites, that I've had that I was like looking to sell. I remember back like 12 years ago, 13 years ago. We had a really great offer. The site was making like $2,000 or $3,000 per month. We had a great offer, and I'm thinking, I can probably grow it a bit more. And then I decided to become greedy and decline and ask for more. And then a few months later, the Google updates. There's some really rough Google updates. I don't remember the year, but that just killed the site. The traffic went down like 10x. And it's like this constant trade-off between whether you, and I think like that's what a lot of what we do is just this kind of trade-off of managing risks, because ultimately, like, it's not super difficult to make a profit when you buy a site for 30x, for 25x. Like if you are reasonably good at managing it, and you good, you don't do really bad deals. Like eventually you'll make a profit, but the problems come just from this risk. It's like all these different risks that happen. So like if you are able to really manage those risks well on a portfolio kind of scale, then I think that's a main thing to make it a success.
Yeah, I mean, I guess everyone's afraid of selling it too early. And I've definitely had that happen where I sold a site and then the buyer did really well with it without doing anything. And I'm thinking, I sold too early. Or, I mean, even we picked up a site in March. And even after the Amazon, so I think it was making around 8,000 or 9,000 was the average. And then we picked it up. And so after the Amazon changes, it should have been, based on 8 or 9, it should have gone down to about 6. But I think it made about 15K in April, and it's already made 9K in March. So it will probably hit around 14, 15 again. So, and we didn't do anything. We just picked it up at the right time. So in this instance, the seller could maybe have held on longer and sold it for 50% more. And now we're thinking we should sell it like as soon as the average hits 15K, like the 6-month average, because like you say, we could say, let's hold it for another 2 years and then something happens. So I mean, it kind of goes back to what you were saying about 20 minutes ago about timing the market. And I guess you just have to think, well, we've already got a good win. Let's just take this rather than, you're not going to go broke by taking wins too early.
I think it's also about like if it's in a fund, I look at the overall strategy. Like if it's the biggest site, and I know that if that site loses a lot of traffic, that's going to be a problem. But if it's a small site, frankly, that's fine. If it drops, that's not a big deal. Like the pain of that site dropping is not that high compared to the potential reward. This is another site that might be really higher risk and more dangerous, and then it would be very painful if it drops.
Yeah, that's also good point.
Yeah, but at the same time, I think like being too greedy can actually be dangerous, especially like in finance, because I mean that's how everyone kind of loses money on investing, right? Like just being too greedy, not selling at the right time. Like back in 2019, I think, then Bitcoin hit 20,000. I was like sitting there and thinking, 20,000. This is probably like too much. It's probably going to start to drop soon. And I thought maybe I should just go and sell it right now. But then I realized that selling Bitcoin is actually complicated. And I was like, okay, maybe I'll do it later. And then it started to drop. And I mean, I was in a... Yeah.
I remember when I first bought in, I was like, I think I bought in around 5,000. And I was like, I'm going to sell if it hits 10, and then it hit 10. I'm like, I'm going to sell if it hits 15, and then it hit 20, and I'm like, this is never going to go down.
Yeah.
And then I could have sold at 15 and done very well for myself. So
a friend of mine is it's like a really successful stock trader, and he told me he just bought Bitcoin. It was like 5, and he bought a bunch of Bitcoin options because he did his analysis, his calculations, and then he just sold everything. And then it was like 12 or so, because he did his calculations, and he was like, okay, he's like, I had this number and I had that number, and I knew exactly that this is what I was going to do, and I did it, and that's it. He's not worried. He just has his mark, and that's it. Yeah.
I bet he made a lot of bad mistakes to get that skill in the first place, though. So kind of like what we've been doing with affiliate sites.
I think that's probably how it works every time as well. Like you have to make some mistakes, like I would be, if someone says that they've done a lot of deals and they've never had a bad deal, I probably wouldn't trust them as much as if they said they did have some bad deals. But
I shared a guest post. No, I shared a blog post on our site, I don't know, a few months ago. And I talked about some of our biggest mistakes. And definitely some people said it made them trust me more. Not only because I'm being honest, but because they correctly believed that those mistakes I'd learned from, and I'd evolved my investing philosophy off the back of those mistakes. So basically they were like, yeah, you've had your big loss, so you're a better investor. And I said, well, I don't know if I've had my big loss, but I've had a big loss. Hopefully, there aren't more ahead of me. But if there are, then I'll learn from them and overall, come out better the other side as well.
Yeah, I think that's the best way to look at it. And we'll definitely include the link to that post in the show notes later. That is interesting. So another interesting thing I want to discuss is the difference that we are seeing in ranges, like buying sites in 5 figures, 6 figures, or moving forward to like 7-figure businesses. I'm noticing that it's quite a big difference. Like when you look at mid-high 6 figures or up, like it looks a lot more like, starts to look a lot more like a business generally. And there are more things involved, more systems, and
more people.
Yeah, and it's also a lower risk. Like when you look at the risk factors, at what could go wrong, it's generally overall kind of a lower risk that things would really go really badly. But at the same time, it's also more complexity. So you have to be more organized. You have to have a better team, better systems, better structures. While with smaller businesses, it might, and like with the bigger businesses, it might be more difficult to grow them because it all involves a lot more processes. And with the smaller ones, like a $50,000 or $100,000 site, you can grow it faster. But at the same time, like the risk is bigger, and there is fewer sources of income, fewer sources of traffic, so the risks are less diversified.
Yeah, and I think the bigger ones tend, like the 6-7 figure ones, tend to cost more as well. I mean, at least when you get to like the $1 million range, you might be paying 4x for a business instead of 3. So that also kills the profit a little bit, the ROI. Yeah,
that's important. So what advice would you give to people coming into the market and looking to buy their first website potentially, or invest in a deal?
Well, I mean, it depends how much money they've got to play with, but I guess it doesn't, because if they have a ton, like high 6 figures, they should maybe do this anyway. So if they want to learn everything and they want to do everything themselves, or they want to learn how to do everything, then they should probably buy a smaller business. Like, I don't know, yeah, 50K might be a good range. or, if they can't afford 50K, then whatever they can. Because even if they want to buy bigger businesses in the long run, a lot of the things you need to do with a smaller business is the same. So that's actually an argument in the case of buying a bigger business, because it's the same work as a smaller business in a lot of cases. But when you're learning, it makes sense to learn with less capital at risk. But now if someone's strategy is like they're looking for a passive investment, well, then it changes, because then they should invest in your fund, or they should like hire us or something like that. So that's kind of a different conversation. But really, I think the way to win at this space is to diversify as much as you can, because if you can avoid having your sole investment go to zero, then you can basically do very well. And then the problem is when you diversify, you either need to spend more money because you're buying more sites, or you're spreading the same amount of money among smaller sites. But because there's so many of them, you need to hire people to help you run them. And then when you hire people, your return goes down. So the alternative really is investing in a fund, or having a large amount of money that you can diversify. Because in a fund, the costs generally aren't going to scale as the number of sites scales. And you're getting that diversification. So, I mean, ultimately, it also depends, what is the person looking for? Are they looking to put 50K and then double it? Or are they looking to invest $1 million and make 10% a year? It's a completely different strategy as well, depending on that.
Yeah, I get asked that question a lot, like almost like every week, almost every day. Do you get that question a lot as well from investors, from buyers?
Yeah, and honestly, my answer changes depending on who they are and what their profile is.
Yeah.
Like they're all correct answers. It's just it depends on what their situation is. Like I had someone who has 500K. He wants to invest. He wants to buy 4 or 5 businesses, and he's like, "Should I buy one 500K one, or should I buy 4 100K ones, or should I buy 8 50K ones?" And I was like, "Well, what do you want to do? Like, do you want to try and aggressively grow that 500K as much as you can, or do you want to just, you don't know where to park it, so you want to park it somewhere more secure?" There's just so many different strategies, and there's no right answer really.
Yeah, that's true. Yeah, my typical answer is that I advise people to learn about the industry first. Like the best way to learn, I think, really is just buying a small site. Like there are very few different courses. I personally haven't read the courses that teach you how to invest in websites, but like I would imagine you can probably learn more or about as much from just buying like a $2,000 website and managing it by yourself versus a $2,000 course, because it's really different. Like when you buy it and then you realize, okay, so this is like the technical aspects. Okay, this is WordPress. Like this is how you manage it. This is what an affiliate program is. This is what AdSense is. Like this is what monetization means. Like this is what SEO is about. Like this is how you work with freelancers. Like this is how you work with other people to get things done. And it's on a very small scale, but it's not hugely different from doing the same with a much bigger site. Just adds more complexity, but that really gives you a great understanding of how can online businesses work. Because a lot of people asking that question, they often come from an offline background, or people who have never managed an online business. But other than that, I agree with like depends on what they're looking for.
Yeah, I mean, I think on the topic of courses, I love taking courses, but I also love learning by doing. And I don't think they're kind of mutually exclusive. Like, you're right, you'll learn more from buying a $2,000 business and running it than you will from a $2,000 course. But the $2,000 course will kind of it'll pour like petrol onto the fire of your learning. And so it's like you can't learn how to drive a car by reading a book. But if you sit in a car, having never really seen inside one before, you might not even get a meter down the road. So I guess where I'm going with that is, I think the best situation is you buy the course, whether it's a $2,000 course or a $99 course or whatever. You buy that, and then you buy a $2,000 website as well. So the course teaches you what to do, but then you learn a million things from actually doing it. That's probably the best.
Yeah.
But there's also a lot of people that don't want to take a course and they don't want to buy a business and learn. They just want to invest their money. So then different strategies required for them as well.
Yeah, that reminds me, my first driving lesson. I just came in and the instructor says, "Okay, sit down," and I'm going to sit down in the passenger seat. He's like, "No, you go sit down here." So I'm sitting in front of a wheel, and he's like, "Okay, drive." I'm like, "I don't know how to drive. This is my first lesson." You just push here and you do that, and that's it. And a minute later we were driving.
Was it automatic transmission?
Yeah, automatic. Yeah, so it's a bit easy. But I was like, okay, that's it. And after an hour, I felt okay. I kind of know how it works. Obviously, I took a bunch of more lessons, but I immediately got a sense that I understand what it's about.
Yeah, I mean, I don't know. For me, if someone bought a website and then, okay, let's say the migration actually worked and they didn't mess that up. And then it's like, okay, day one, looking at your Google Analytics, not really sure what this means. Bounce rate's quite high. What does that mean?
Yeah.
SSL certificate needs renewing. Don't know what that means. Need to update some plugins. Oh, the site broke. So it's like, well, that went well. So that's why I think you need at least some kind of instruction manual to help you.
Yeah.
But yeah, I mean, my first driving lesson, I learned to drive a manual because in the UK, you just mostly drive manuals. Kind of laugh at people that drive automatics. But there's no way I could have learned that from a book or a course. Feeling the two pedals and finding the biting point. And you can only learn by doing. Absolutely, that makes sense.
It's like that. A few months ago, I learned to drive a big bike, and it's kind of the same. It's similar. You just there is no way to learn it otherwise. You just have to feel that, when you release, when you press. Yeah. So I guess to summarize it, our advice to people starting out would be, first of all, to figure out what they want to do, and if they want to learn and by themselves, that probably some combination of buying a course and then buying a small site, and then maybe once we feel that they are comfortable, they can go and buy a bigger site, something like that, or go with a fund or with a person that does it for you.
Yeah, I think that's probably the best way to do it.
All right. Well, thank you, Dom. That was really interesting to discuss and some great topics.
And thanks. Great to be here.
How can people find you online? How can people reach out to you?
Website is onfolio.co. So that's where people can find my blog and reach out to me if they want to learn more about any of our services or just have a similar conversation to what we just had. But yeah, basically they're the best place to find me.
All right. Thanks, Dom. Till next time.
Domain Magnate is a leader in buying and selling online businesses with a proven track record of expertise gained from over 300 deals since 2004. To learn more about how we can help you acquire or exit a profitable online business today, head over to domainmagnate.com for more details.